Hey everyone, thank you for joining this week's Tea and Crumpets. I'm Gloria S. Crump, the Queen of Real Estate, and I'm the Coastal Leaders Realty Group. And today our special guest is Tanner Gorum with FT Home Loans. They're located in Gulf Shores, but they do loans in Alabama and Florida. So thank you for coming.
Absolutely, thank you for having me.
And she's actually been here before, so she's becoming quite the regular. And so obviously people hear me all the time say people should buy now. But I would love for a lender to explain to people why they think they should buy now.
Yeah, so one thing I want to talk about is I think a lot of people think, oh, they're just in sales, they're trying to sell. But I mean, we are the experts here, and we see kind of how the market fluctuates and stuff like that. So one thing is, right now rates are higher than most people would like them, right?
Yes.
So with that, listing prices are a little lower because there's not the competition to sell. They're sitting on the market a little bit longer. So these sellers are ready to get rid of them. They're ready to sell them.
And we're having to reduce properties. You're starting to see that. Not as many buyers are able to purchase. So there's a lot. The buyers that are in the market have a lot more buying power.
Right. So you do have that buying power. What I predict is going to happen is when those rates come down, everybody's going to be trying to buy them. All those people that are waiting now saying, well, rates are just too high.
Exactly.
Everybody's going to be trying to buy them. So you're going to get in multiple offer situations. You're likely going to get beat out on the property that you actually do want.
Yes.
And those listing prices are going to go back up. So.
They are. And you're not going to have, ask for the seller concessions. You're not going to have as many, a lot of times we'll go through home inspections and clients want certain things fixed or things of that nature. And sellers are more reluctant to do it now because there's not as many buyers.
Exactly, and you have the more power now to negotiate seller concessions into your contract, and those seller concessions can be used for closing costs and they can be used for prepaid. So, when you buy a property, you have to pay 12 months of your homeowner's insurance. That can go towards that. It can go towards buying your rate down if you get enough of those and you have some left over. So you can buy that rate down initially. And then once rates do go back down and everybody else is scrambling trying to get under contract on a property, you can just refinance. You already own the property that you want.
Well, and two, pretty much your equity is going to increase at that point because more buyers are going to be in the market, which obviously drives the prices up and the demand. So the people who are purchasing now, not only will they be able to do the refinance, but they'll also have more equity, and then that can kind of go into, some people can do even the cash out refi that you were going to talk about and things of that nature.
So when you do a cash out refinance, you're essentially taking the equity out of the property that you own. Okay, you don't have to take all of it. You can take, as much or as little as you want to, depending on your unique scenario. So you can take that, you can do home improvement projects to the house. Say you want to update the kitchen, you want to add a pool in the backyard. You can do all of that to improve essentially it's going to improve the equity on the house.
Exactly, even more so. And then when the interest rates come down, your monthly payment could possibly be the same amount of money, and you're actually using the bank's money to help actually fix your home and not coming out of your own pocket. It won't pay off right then as far as how much money you're saving, but down the road, you're right, like the bank essentially is paying for it. That's part
with
of
the lower interest rate.
It is. I mean, because you're not having to come out of pocket, of your own money. Like Chunska's pools right now are, because I see people who pay $60,000 from a swimming pool, but it really does help. The value too.
It does.
And two, even right now, if you're thinking of selling, this might be a good time to do a cash out refi if you're going to want to improve, because there are certain guidelines that you have to go by if you do a cash out refi. You can't list your home or sell your home for how many?
So it's typically you have to make 6 payments.
Okay.
So that's usually going to equate to more like 8 months. Just because, if you buy now in September, your first payment's not going to be due until November. So then you would have to make 6 payments from there in order to be able to refinance or sell.
All right. And then now there's some reasons to do the restructure loan that you have here.
Yes.
So
a few of those reasons are debt elimination. So if you want to we talked about doing home improvements, but if you wanted to take out money to pay off debt, you could do that. You could also, it improves your liquidity and wealth. So with that equity and stuff that we discussed, it accelerates the equity. And then you do have the option to skip a payment because you're refinancing. So your new loan won't take place. Your next payment won't take place until.
So you have a grace period.
The following month, yeah. So, and you do have a bi-weekly option, and depending on your scenario, you could also decrease your term. So if you wanted to go from a 30-year to a 15-year, that's an option that we could look at as well.
Well, good deal. Now, there's also, you have, your bank offers some 100% financing options. So what are they?
So we have, of course, USDA, VA, but of course you have to be a veteran to qualify for that. But we also have a new nationwide down payment assistance program.
Okay.
So that is a good option. With USDA, you have income limits.
Okay.
So a 1 to 4 person home, your income limit in Alabama is $110,000.
So 1 to 4 person for USDA is $110,000.
Yes.
Okay.
Income. And with a USDA loan, even if someone is not on the loan but they live in the house and they're over the age of 18, you have to count their income.
Really? Okay.
Yes. So a lot of times, especially in the Baldwin County area where everything's kind of so expensive, people exceed that threshold.
Yes.
So with the down payment assistance loan, there is no income limit.
Yeah, and that's actually good because with, obviously kids are having to move back in with parents. They're obviously working. Some of them are working to save money to buy their own house.
Right.
So the USDA would be a disadvantage for the parents. And so the good thing is now y'all have the down payment assistance.
Yes.
And that does not have an income limit?
It does not have an income limit.
Oh, wow. Okay.
And you can go up to, I believe, 50% debt to income ratio.
Okay.
So the way that one kind of works is we follow FHA guidelines. So you're going to take out a first mortgage FHA loan.
Okay.
At 96.5% because you have to have 3.5% down for your down payment on FHA loan.
Okay.
So you're going to take out that first loan. We're going to lock in your rate on it.
Okay.
So say your rate, we lock you in at 6%.
Okay.
For the second mortgage, that's going to be your actual down payment that you're using.
Okay.
And the rate on that is 2% higher than the rate on your first mortgage.
And it's just a 3.5% second mortgage.
It is, and it has a 10-year term.
Oh,
so you have 10 years to pay back that. You could actually do 3.5% down or 5% down. We have two options there. So depending on what fits your scenario the best is what we can look at both options.
Okay. And some people that don't know, it's not just the home, it's not just the person that has to qualify for FHA. Right. Property has to also qualify for FHA. So if the home is not in that great of shape and there's certain, if that's correct.
That is correct, yes.
So, you have to look at the type of property too.
That's correct, yep.
So if the condition is questionable, chipped paint, peeling paint.
Chipped, peeling paint, windows being sealed shut.
Yes.
Handrails on steps and stuff like that. So.
Yes, so there's certain things, if you qualify, the house also has to qualify.
That's correct.
FHA,
yes.
So that's good to know.
The minimum FICO on that one is a 600.
Oh, wow.
So we can go down to a 600 on the down payment assistance.
Now, what's the USDA's FICO?
USDA FICO can go down to a 580.
Oh, okay. All right. Well, that's actually really good for people who have maybe gone through some hardship. That's
correct.
This is actually really, good news for them.
That's right. And then we also can do, you do not have to be a first-time home buyer to utilize the down payment assistance program.
Oh, that is
It does have to be a primary property.
Okay.
But you do not have to be a first-time home buyer. Okay. That's a misconception that a lot of people have on these. So,
and then with USDA, it also has to be a primary.
That is correct.
So both of these.
Yes,
okay.
Both of these are primary properties. We can actually do warrantable condos on the FHA.
Oh, well, that's good.
Usually with the USDA, you're not going to be in a approved area to do a condo because of population and stuff.
Yeah.
But we can do on the DPA, which you cannot do with the USDA. We can do 2-unit properties.
Oh, wow.
So if you wanted to buy a duplex down here or something, you could utilize one side as your primary residence and then actually utilize the other as an investment property.
That's actually pretty awesome to know. Yeah. That's actually really good to know.
So you're getting a return on your investment.
Exactly. So you're kind of knocking out with two birds with one stone. You're getting your primary, and you're able to do, you know, an investment, which, I mean, with the down payment assistance, I mean, that's actually really beneficial with no income limits.
Yep.
Because it's very hard, you know, to find a duplex in an area like this that you would, if you had a limit on your income, you would not be able to qualify technically for a duplex. Now, could they use the potential rental income from the investment side to help with offset, or do you have to just approve the 50% debt to income ratio? They can't use that.
You should be able to use the what we would get the appraiser to do what we call a 1007. So they'll get the rent comps and stuff like that, and you should be able to use that.
Okay.
To help you qualify.
Well, that's really good to know. Well, we'll definitely be having Tanner's information at the end of the video, and as well as like in the captions. And then obviously, I mean, if you or know someone else, you know, that's looking to purchase or even potentially refinance, definitely give Tanner a call. She's obviously very knowledgeable, and I appreciate your time.
Yes, thank you for having me.
And we'll have some information for it too. So thank you so much for watching, and I hope you learned something.